Someone reached out to me and said, does my demand and supply strategy works on boom and crash? And the answer is yes. This strategy works on boom and crash. It works on every market, both in currency pairs and also in crypto and also in synthetic indices. So what I want to do is to use my demand and supply strategy to try and analyze this market. All right. So first thing first, as usual, we go to the book. We are looking for two recent swing highs and swing low. So this is the most recent swing high, swing low here, since the market is in an uptrend. But what I can see here is that this is a demand level. Price was supposed to come down, tap in before going up. At least come down and tap in the demand zone before going up. But as you can see, it did not come and tap in, but it went up. So the highest that can happen now is I will miss this trade. Missing a trade is better than losing a trade. And what I can see here, this is the kind of price action that I love to see on the pairs that I am trading. But since I don't trade boom and crash, I'll try as much as possible to analyze the pair. So let's just look for a good price action that can describe how to use it. Okay, this level is good. I can see. So the two is, let's assume that everything you are seeing from this aspect has not happened. Let's say the only thing we are seeing is this price action here. Let's assume that this place is not here. So what you want to, according to this strategy, your two recent swing highs and two recent break of structure. So this is the two recent swing high. This is swing low number one. Then this is another swing low number two. This is swing high number one, and this is swing high number two. Once you have successfully identified it, then you mark out your break of structure. This is your break of structure one. Then this is your break of structure two. You can see. Now the next thing is to mark your recent demand zone. Your demand zone. It can be on the 1 hour or the 4 hour, but I like to check it on the 4 hour first. If I did not see it, then I can check it on the 1 hour. Once you mark it, you mark your fair value gap, you make sure there is an impulsive move. So checking it here, we can see that we have impulsive move. Then we have a demand zone here. Let me carry my two here. Now your demand zone can be more than one candle. If the demand candle is small, it can be more than one candle. If the demand is small, it can be more than one candle. It is permitted. So this is, let me just name this 4 hour, let's say 4-ish demand zone. So this is how I analyze my market. After you have successfully spot out your swing highs and swing low. Despite the fact that I don't trade boom and crash, the strategy works. I'm a kind of person that I select pair to trade. All right, but I don't like trading boom and crash. So sorry, this is not the high, because we said this market has not happened. This was supposed to be your high. Two recent swing high, two recent swing low, because this market has not happened. Now let's assume now the market is retracing. Immediately it tapped your 4 hour demand zone. You then let me mark this out so that I will know the area. Let me mark it with red. So we now go to 15-minute time frame to see our 15-minute market structure shift, because that is the next step. There are more strategies here. More strategies. If you have this book, there are a lot of strategies, both the selling and the buying. So 15-minute market structure shift. So let me try and spot that place. Okay, this is it, the red section here. So this is it. Let me delete it. So once it tapped in your demand zone, this is your 15-minute market structure shift. I hope I'm making sense. Yeah? This information is what you people are paying. I paid roughly 3 to 400,000 to get this knowledge I'm sharing with you for free. So this was supposed to be your demand zone, rather. According to the strategy, mark your 15-minute demand zone and the fair value gap. So according to what I can see here, there are two demand zones. Two. We have one here. We have another one here. But honestly speaking, let me be realistic. I prefer to take the trade from the down one rather than the up one. Assuming I'm the one that is taking this trade, I will miss it. I will miss the trade because I prefer to take it from the down zone rather than the up zone. So it is better to miss a trade than to lose a trade. If you miss a trade, there is still room for re-entry. Let's say, for example, I place a limit but it did not enter. Guess what? This is another opportunity for you to enter. Market gave you a new break of structure right about this level, giving you a new BOS there. That's a new BOS. And again, what did it do? It gave you a new demand zone here. Let me delete this one. It gave you a new demand zone. Beautiful one. Now what you can do now is to place your limit after the fair value gap there. You place it there. Stop loss below the 15 minutes. Then you target at least 1:3. Boom, TP hit. Boom, TP hit. You can see that my demand and supply strategy works across every market. So if you want to target, let's say, a long risk to reward, then you can target this swing high on the 1 hour. And even if you still target the swing high, the market still hit your TP. You can see market still hit your TP. This is how I trade demand and supply. It works on every time frame, whether you are trading boom and crash, whether you are trading job index, whether you are trading synthetic. It is just that I am the kind of person that don't trade boom and crash. I like to select pair. So go and check it out. If you have this book, there are strategies here. There are even risk to reward. Everything is here for you to use. So that is it, guys.